Welcome traders. In this video I want to review the very volatile week that just ended on January 29th due to the GameStop volatility. And rather than go over what I have demonstrated in the past with the screen that was in front of us, which is using our special divergence to trade with the VIX, I want to do something a little bit different. What is going to be different about this is that we're not going to be looking at our bloodhound signals first off, because that is not what this is about. What we have here is a SPY chart with the zigzags set to 75 cents. So that would equal a 7.5 zigzag on the ES chart. Now, what is also different about this is that what I am doing is I'm denoting a short signal and a long signal by either a red or green circle on the chart. And the other thing that I'm doing is I'm only looking at a signal if it's going to coincide with a divergence signal. And what's also important to note is the actual location of the circle itself. The middle of the circle basically represents where we would have gotten the signal. So in trades that are going to go against us, you're going to see that circle before we hit an actual apex and not necessarily when we are at an apex. If, for example, we have nothing up here, that means we did not have SPY divergence on the smaller chart when price reached this apex or any point thereafter. So with that, let's start taking a look at Monday. And pretty much off the open, we had two signals here at our resistance area. And we followed that with a buy signal, a sell signal, and another buy signal, which took the market up almost 10 points. We had this short signal here, and the market dropped approximately 26 points. And as we were nearing support, we did get a short divergence signal here. And that took us down another 23 points from that short signal, which is what you saw on the original chart. The next signal we received was here when we had an accumulation signal. And what is really kind of great about using this larger chart is that when we go to look at what our actual loss is, we got the signal, price traded approximately 4 points higher, and then we basically get stopped out about a point below where we originally entered. And this is going to be a common theme of what you're going to see with most of these losses here. We next have two short signals here, which take price down another 15 points. We have another short signal here taking price down another 10 points. What we see here now is a signal that, if it was taken primarily and not held or dealt with, would have ended up in a loss. So we see we have a signal here, price traded down approximately 3.5 points, and then we got a buy divergence signal here. At this point, if you'd taken profits and waited for your next signal, we would have then generated another signal up in this area right here, and then another signal up here, which dropped the market another 8 points. At that point right here, before we got to the ultimate low, we had a buy signal, and that ended up taking price approximately 13 points higher. Our next accumulation signal, we had two signals here, first right here, and then we traded a little lower. And as you can see, what we did is we traded into a special divergence short. And again, we had an accumulation long right here. Back here, I just wanted to note the very strong number for the KP2 ratio, which was at 2,971. And as you can see right here, the same rules apply that I talked about in the last video, and that is as the KP2 ratio is getting stronger, that is signaling increasing support. Now, if we look at the trades that occurred here, again, what we are seeing is if we were looking at this on a 3.5 zigzag chart, we'd be looking at the boxing pattern. And the boxing pattern occurs when we have multiple special divergence shorts with multiple accumulation long trades. And we saw that as a pattern occurring here and here, and ultimately once we got up to the top. When we did get up to the top, we would note what we're looking at, what is important to us is the number for KP2, and at this point it was a negative 200,000 shares. And that took us down 17 points into our next long trade. Remember, if you see a trade and it begins to paint the opposite support or resistance zone, that trade was good for at least 7.5 points. So here we have an example of where we had long signals on both the 7.5 and the 3.5 charts right here, but price traded a few pennies too low, giving us what would be considered a losing trade. However, after price traded the few ticks below, you see that we got 8 points out of that trade. Here we have another divergence pattern where that ended up going almost 29 points to the plus side. Again, here's two examples where we get up to this point when we are in a definite strong trend. And if you're trading in a strong trend, what I've said all along is this. We don't know that just because we have a signal in a strong trend, that is going to be the ultimate top to a pattern. So what we see here is we see two consecutive signals and looks like about a 5-point sell-off, only to trade at least 10 points higher to the ultimate top right here. And then what you see is this series of a long trade here followed by several short trades until we eventually get down to the low right here. And what I find is important here is how you manage a trade. If we did enter shorts in right here, how did you manage the trade when you were given a long signal here? And then did you reshort? Did you go long? Did you reshort? Did you go long? That's going to be up to your individual trading plan. But what is the most important thing to me is that you were receiving real-time signals from Zone Trader Pro telling you if you were short here, you might want to think about getting out. Or if you went long here, well, you have a reason to get out at this point and not be holding. And that really is the most important part. Now, after creating a strong trend, what is normal to happen? Well, price trades almost to the tick back to our minor support zone where we get another long trade. And when we trade back to minor in a strong trend, that is a strong trend pattern. That gives us a 9-point move into this short trend trade here, into this short exhaustion pattern here, where our KP2 number is this time a negative 186,000 shares. Now, here's another example of a losing trade where we got our signal here, and this is the area that we can first get a signal at right here. So I'm very confident of where the signal's being given. If you want to understand in this case why it's right here, all you have to do is look to down here, and this is where the zone begins to print at. So the zone began to print at here. This is where we would have gotten our signal. And right here, before we had even lost a point on the ES, We're being told that this is non-divergent, and then this trades down another 4 or 5 points. So our losses, when we do end up going long, are far, far outside of what our profits are when we are getting the 7.5 points out of each trade at a very minimum. And that was basically how Monday ended. Now let's take a look at Tuesday. Okay, Tuesday started off with a long pattern here, but we had no signal on the 3.5, so nothing was done. We then had a signal here, and our KP2 at this point was a negative 136,000. Here again is that same accumulation trade that will go for a loss that at most is a point. We would next follow that up with a signal right here where we ended up getting short. It traded about 4 or 5 points in our direction. We were given a long accumulation signal, and then price traded higher right here. But here we did not have spider divergence. We had regular divergence, which I don't consider as a trading signal that I personally want to take. So because we only had regular divergence at this point, I'm not marking a sell right there. After that, we traded into a long accumulation pattern here, which traded 4 or 5 points higher and then sold off, but did not go non-divergent. But then we received not one, but 2 SPY divergences before price traded down and the trade would be classified as a loser. Here's an example of 2 special divergence short trades. Our first, we would have gotten a signal right in here, and it went non-divergent at this point, and we had no other trades for Tuesday. Wednesday starts off with some serious volatility and a gap down. So here we have our first short trade, and the KP2 at this point was a negative 68,000. We again trade into that accumulation pattern that was going to give us a loss for a very small amount. Then we trade into another special divergence short pattern with a second special divergence signal from here on the chart. That takes us into, again, a small loss on this accumulation long. And it is possible that on this trade here, we could have actually seen that signal all the way back here. In this case, this represents about a 3-point drop to where the signal became non-divergent. Here's an example of us getting the trade right, but just not the timing. We had our first signal here, and then price traded down at least 3.5 points, and then traded slightly higher by about 2 points until we got our pullback that we were expecting, and that in this case good for 9 points. Here's an example of a short signal that's going to go for a loss. Again, we've entered at this point a strong trend, and we are given an accumulation buy on the smaller chart here, a second one here, and then ultimately up here we have a spider divergence sell signal on the 3.5, which is good for a 10-point drop. At this point here, we were given an accumulation buy, taking us up to this point right here. And you can see the reason why I put the circle right here. If you put the data box on the chart, you'll see at this point the number for KP2 is a positive number. It doesn't go negative until we make this high right here, and you can see that it was a negative 26,000. So this is one way to tell with special divergence whether or not you're going to get a signal down here which we wouldn't, and we actually got our first signal right here at this apex. Price then trades down. We're given an accumulation buy, and again we enter the box pattern where we're boxing the buys and the sells. And the final ultimate sell, again, good for almost 16 points. That takes us into a series again of this boxing pattern, and you can see that if you managed your trades by initially taking the short, you got 3.5 points each time, but you were careful and took your profit. You can see how that would have actually made more in profits than the original 16-point move off the bottom. After that, we did have a successful signal where we were not being given an accumulation signal until we were in this area right here. So again, a 2 or 3 point loss after taking at least a 10-point win right here. Again, what I wanted to emphasize was the signal had actually occurred right here where we're now negative on the KP2. So that was good for a 11-point sell-off from there. And again, what is really important to note about this accumulation right here is note the level of the KP2 ratio. 4,047 was the number that was ultimate on the low, but it was significantly lower at almost 6,000 shares per penny at this point right here. Now, if you were short from up here, what you want to be looking for is the three things that I talked about in the last video, and that is ratio and price all responding together. And we see that as price is dropping right here, the ratio is dropping and to its ultimate point right here. And at this point right here, the ratio actually jumps, but that's due to market orders, and that's going to take us 20 points higher. You see we got a signal right there, and that signal is basically going to be just a little bit too soon, and there wasn't a follow-up signal at the eventual high. That again was followed up by 2 accumulation buy signals here that took price higher by 10.5 points. Here we were given an accumulation buy signal, and that we're going to take as a loss. The next signal we get is this sell signal here, followed by a special divergence buy signal that is going to turn out to be a loser. However, we're able to exit it profitably, and at this point right here, we're being given a second short signal, and whether or not you were to cover it right here, which is probably going to be a smart move, that would be something that we would actually look to the VIX to help us with. Now, at this point right here, we've definitely entered a strong trend. And one of the things that I've said in my previous videos is that I want to be aware, if I am in a strong trend, of any signals going with that trend. Now, this turns out to be a 35-point sell-off, and there were special divergence short signals trading with the VIX, all 3 points right here before we're going to end up making that low. And I put this here not as a reason to go long, because there obviously isn't a divergence signal there, but if you use that as a reason to cover any short from back in here. There was no signal here. Again, we're being given a signal right here, trades down about a point before eventually trading up a little over 11 points. Here we're given a pair of signals here, which is going to end up trading higher by about 11 points, including a signal here. However, for the short signal, the KP2 was positive during this entire period until we got to right here. Then we had a 9-point sell-off followed by a successful 12-point long from there. Here again, we'll notice that we had special divergence right here. And if we managed that trade, what we did is we bought here, got out here with a 3.5-point profit. And if you were to re-engage right here, you would have taken a small loss. That takes us to the close, where we basically entered this boxing pattern again. And again, if we took our longs and our shorts as they appeared on the chart, we did fairly well into the close. Thursday ended up being the most volatile of the days. And we're going to start it out with a successful short trade, good for 11 points. We again note the KP2 here of a negative 225,000 shares on the open. Now, I want to point this out right here. There's no trades here because of a bad tick that is occurring right here. So I didn't put any trades, including this accumulation trade here. I didn't analyze that because of that bad tick. If you do get a bad tick like this, basically you're just going to have to ignore any signal that you get from here and the follow-up long and wait until you get your next signal. Your next signal came fairly quickly with a short trade here, good for 8 points on a KP2 of a negative 162,000. We got long, we went up that 8 or 9 points, and again sold off. We had 3 different short signals giving us approximately 12 points. What happened then? We entered the boxing pattern where right here we were given our first short signal, but we were told to cover it here. We again began boxing higher until the ultimate signal up here, which then traded down 10 points. We were told to cover and get long here, and that traded again a little lower right here. And again, what I do want to note is what the KP2 ratio was telling us. All the way back here at this low, we had a very good number of negative 3,100. And at this point right here, we were clocking in at a negative 2,300. And what is very interesting is from the last video, you can remember what I said about price going higher, but the ratio is going in the opposite direction. That signifies a accumulation. And if you have any questions, like I said, refer to the last video that was done last weekend. But this is a sign right here that price is going higher. And if you see that, basically, I would use that as an extreme caution about trading right here. We did have another long signal followed by a short signal right here. And then we entered this series of signals here where we're basically going up and down 3.5, 4 points every time until they basically went and ran the stops here, giving us a losing trade. However, again, what is most important is that you note the state of the KP2 ratio. What is that telling us during this entire period right here? This is a huge accumulation, and at this point we were down to about 4,800 shares per penny. And that is on a pullback of almost $1.80 in the SPY. So what we're seeing here is just a huge accumulation. Now, again, you can notice this pattern right here of the short trades failing. And again, all we have to do is look back at the ratio. We note that the ratio is again going higher and getting deeper into the numbers, where at this point right here, it was a negative 3,300. And what is unique about this is at this point, we're not measuring support, we're measuring resistance. So this number should actually be significantly higher or even positive. But what is happening through this whole point right here, again, as price is rising, the ratio is falling. And the shorts are basically trying to short this, but the market isn't letting them and it's taking it higher. So we have a long signal here followed by a short again, and that was good for 14 points. We're then being given a buy signal in this area right here. Price trades a little lower. We're again being given our boxing pattern here. And again, we're going to note that we had a fairly good ratio right here of about a negative 1400. Now, here's what I want to do. I want to go and I want to put a line basically where all of these shorts were occurring at. And what is really interesting is the actual deltas themselves. Here the delta reached a negative 738,000. Here the delta reached a negative 876,000. So let's put a horizontal line on the chart right here. Now, here is something that I find very interesting. And basically what you're looking at now is the 7.5 zigzag chart on the ES. And down here what I have is I have a cumulative delta. And the cumulative delta here in black represents trades of 100 contracts or more, what we would consider the smart money. The green line represents trades that go off between 10 and 99, representing money that is more intelligent, but again, not always right. And the red line denotes trades of 9 contracts or less going off. And at this point, we note this big divergence that is happening right in here. And the traders that are trading the larger lots are actually buying, and the smaller lots are the sellers. Now, what is also on this chart is the spot gamma levels. And these can change slightly from day to day, but they only changed slightly from Thursday to Friday. And these levels represent Friday's numbers. So basically the area where we drew that line at is right here, which coincides with this yellow line here, which is a spot gamma support resistance level. Now, why is this important? Well, it's important because slightly above it is the area of 0 gamma, and below it is the area of what is called the volatility trigger, where we can expect to see a larger amount of volatility. The market is generally more stable when it's above 0 gamma. So let's just keep these levels in mind, and I'm going to go back to the spider chart and show you what's going to happen in through here. So we did end up trading higher, and you can see we had a losing signal here. And then we had 2 signals at the top that basically called the high. And again, what is important to note is this. What you're seeing right here represents a pattern. This is our regular counter trend sell right here at our counter trend resistance zone. At intermediate support down here, this is the common area that a trend trade should be initiated at. And then up here, this is again a counter trend trade, and we would consider that a strong trend because we moved almost 23 points off the low. What happens in a strong trend is we have a pullback to minor, and again, we did see an accumulation, but there was no 3.5 point support at this level right here. Next, we traded up into the high of the day, and again, up here, we found ourselves with a divergence sell signal on a negative KP2 of 80,000 shares. So what we're going to basically look at now is we're going to look at what is going to happen into the close. So here we ended up taking a loss at this accumulation signal that we would have gotten right here. Again, the loss is 2 to 3 points after making at least 10 on the downside there. And unfortunately, we didn't have any short signals down in here as far as the 7.5 zigzag chart goes. And that was until basically the close. And then we saw that on the close, we had this KP2 here of negative 236,000. Again, if you manage the trade, you got short there, you covered, you got short there, you covered, you got short there again. And that led us into a 21-point drop on the close. And then on the close, what is again important is look at how the resistance level of the option support were below 0 gamma. And it was at this point that we ended up with our last short signal right there, trading down for 90 ticks. And then we traded up again into this, and then we traded into this trend trade pattern just slightly after the close. But we were trading below the volatility trigger at 37.85. And if you're wondering why there was so much volatility on Friday, all we got to do is remember that we were always trading below the 37.85 mark. We see that as we traded lower here, we came back to test this 37.42 area, which was identified as a support or resistance area. And then what we are worried about if we were long is that trading below here, the dealers need to hedge by coming into the market and shorting the ES. So basically, when we're down here, we're really looking for reasons to get short and trade with those dealers. You can see that's when we took the market from 37.42 all the way down to 36.87 down here. Again, all trading below the volatility trigger way up here at 37.85. So what did this look like on our SPY chart? Again, we didn't have a signal here at the open, unfortunately, because that was a very good trade. But we did have a signal here where, again, this is the area where the signal had developed. And that gave us a 7.5 point drop to here and took us on a 9 point long trade. That was followed up by this accumulation signal that goes non-divergent, but that again works for 16 points. You again see that right here we were given a short signal, followed by a long signal, followed by a subsequent short signal up here and right here. And that was basically good for 10 points down again right to the level of our intermediate support. And again, what we're looking at is right here, and our KP2 ratio is a negative 35.79. And again, this is the area right there that we most likely would have gotten our signal. Price was dropping quickly. Our first buying opportunity really didn't even come in until we were already at intermediate support. But again, we just want to note these levels when they get to, especially to their extremes. Unfortunately, we didn't have a buy signal right here, but we did have a short signal here, followed by a long, followed by a short, this time good for 22 points. If we did take our long signal from here, that of course would have resulted in about a 4-point loss. Here we had a legitimate special divergence buy signal, and if we took it, again we were being warned to get out here and again out here before it ends up dropping to here, giving us another buy signal. As price trades higher, we obviously have a distribution short signal as price traded 9 points higher. We then got a special divergence buy signal here, and we were quickly out of that trade for a small loss. Here again, here's an example of when we're going to enter just a little bit early. Here's our first signal. Unfortunately, we didn't have another signal up here, and we had a second signal that came in right there. We covered that. That trade was good for about 8 points right there, where again, if we got long, we got at least 8 points to there. And again, we follow our trading plan, and if we did short there, we covered, and we again shorted here. This time our KP2 was a little bit smaller at only negative 60,000 shares. But look at the result of that 60,000 shares. It was a 35-point drop to down here. We had no buy signal there. At about 1 o'clock, we had a long signal here that traded lower and then was good for approximately 7 or 8 points until we got a bad tick that was right there. However, in analyzing on the smaller chart, we have this bad tick, but this was a legitimate sell signal regardless of whether or not we had the bad tick. And again, what we did is we could have shorted again here, covered, shorted again here. This takes us into that accumulation pattern right there. That would have ended up being a loss. Now, it's very possible that we had this accumulation signal that was back here, and if we did get in it, we were then out of it. If you went long again from here, that would have been your ultimate loss. This takes us into a long signal about 2 o'clock. Again, we trade lower. Again, note the KP2 ratio, especially at the ultimate low. It went from about 2,000 to a negative 3,200 at the ultimate low. But here was our signal. Again, we get a bad tick here, but the move off the low is still good for about 17 points. And this takes us into our final hour of trading, where we had a short signal there. We covered. We were not able to reshort it, even though we had a very good number up here of 149. That took us into a long accumulation signal here with a follow-up signal. And then we had a short trade that ended up being a loser there. Again, what are we in now? We are in a strong trend pattern. And if we're going to trade with that strong trend. So we could trade there, take profit, trade there, take profit. What happens? We trade down 9 points into, again, a strong trend pattern, and that takes us into an exhaustion pattern there with a negative 56,000 shares short at this KP2. But what the real number is that we want to look at is this entire time up, this number right here was a negative 577,000. So we want to keep that in mind, especially when we're being given this short signal right here. Now, that short signal, whether or not you took it off right here, the ultimate move ended up being over 26 points. And then into the close, we again see this pattern of short and cover, short and cover, short and cover. And again, if you didn't know, starting at exactly 1550 hours, which is right here, there is a program that starts to work, and that is why the last 10 minutes of the market are extremely dangerous to trade, because of this program executing market on close orders. So that basically ended up a pretty volatile week, but if you traded with a plan and basically traded with the special divergence and accumulation signals on a longer time frame, we did a pretty good job of trading. If you should have any questions, feel free to give me a call, and I will include the setup to this in the Zone Trader Pro blog here. So be sure to sign up for the email notifications here and come to here. Here's the video that I was referring to from January 23rd on using the volume analysis to trade stocks and futures. So be sure to check out that video if you are unfamiliar with what I was talking about regarding the ratios. Thanks, stay safe, have a good day.